Hey guys, good morning. How's everybody doing today? Let's see. Hopefully I got this right. Yep. All right. Hey guys, how's everybody doing today? Hope everybody had a good weekend. Um Seems to be like it's going to be a very busy week today in form of earnings. I know Ed was just talking about it. Um Today we're already starting with Tesla. Tesla always does it on a Monday, right? I'm super excited to have something to do on a Monday. NXP is also pretty cool in the semiconductor. I don't know how many of you guys follow it. Um, but hope everybody had a great weekend, right? Anybody have anything to share? Anybody that want anything they want to take a look at? Right before we just do a quick list of stuff. Nah, I mean, right. Monday we have Tesla, NXP. I think I might pull out a video for Tesla. Right, it's definitely going to be pretty interesting. On Tuesday is probably going to be my favorite day. I want to take a look at AMD, Microsoft. Right, I think these two are going to do pretty good. We have Pinterest, we have Google. I know some of you guys are pretty excited about Visa. Right, Visa and Starbucks, two companies I don't own, but I know some of you guys are excited. We also have, or maybe some of you old people, GE, right, 3M. Those are some ones that are doing good. And what else do we have? What's going on, David? How's everything? Wednesday seems pretty cool, right? I want to take a look at Shopify and Spotify for sure. I know some people might be interested in Boeing on Wednesday morning. Then after close, right, we have Apple, Facebook, Qualcomm, Teladoc. I might even do a Logitech, right? Logitech, I want to take a look at Logitech and Corsair. I don't think Corsair is reporting this week, but taking a look at how Logitech does might give us an insight in Corsair. Even though I don't own Corsair anymore, um, I still want to keep an eye on it. Then Thursday we have Amazon, we have Twitter, Skyworks. Skyworks is another big one here on Thursday, and McDonald's and Overstock. I know a lot of you guys talk about these two. Friday seems to be the only boring day, which is okay. It's probably going to be a relaxing day for me. So does anybody have any holdings on stocks this week on earnings? What are they more excited to see? I think maybe AMD. I think AMD. I just did a video on this on AMD, Intel, and Nvidia, and it's crazy how much I see AMD a bit undervalued compared to those other two. So I don't know if you guys caught that episode, but AMD looks pretty good. Now I want to take a quick look at what's trending. FRX, right? We've talked about that one before. FRX is trending. Anything big? NVIS. This one just keeps going all over the place. Microvision. And nothing else that's really popping right now. And then futures I'm pretty sure are going to be quiet throughout the week as they wait for earnings. So I don't think futures are going to be showing much movement this week. But it seems oil is taking a hit. Lumber continues to go up. It's crazy. Lumber, look at that. I wish we would have bought lumber a year ago. That's the only stock we should have. That's the only future we should have ever bought. Lumber. That one's doing amazing right now. Does anybody want to take a look at any stocks right now? If not, I was wanted to see what ARK purchased a lot this week. So buys only. So ARK bought a lot of scales this week. You can see the overall movement in share trends. We also see they're buying this new SPAC, Path. This is one I might do a video on later on. Path, and there was another SPAC they've been buying that I was taking a look at, SPFR. So these are two SPACs that they've been purchasing recently. I don't know what they do yet, so I definitely want to take a look at them and probably do an episode on them. They've also been buying a lot of Coinbase, continue uptrend in that, and 3D Systems. Roblox as well. I've actually did a few episodes earlier. There were a lot of small caps that they ended up purchasing too. But unfortunately, right, I mean, I don't follow ARK to the T, but I'd like to find new companies, and I feel like ARK is a great way to find new companies. Doesn't mean I'm gonna buy them. But they've been selling a lot of semiconductors, right? They sold a nice portion of TSM, of Silenex, of Nvidia. And they've been selling. I'm surprised they sold Square too. They've been selling Square and PayPal as well, and Roku. They've been really buying just some small names. It's what it seems. So is Bitcoin prices back up? I know that has had oh wow, it is. Good morning. What's going on, Elvis? Thoughts on T-Doc earnings? Let's take a quick look at that, Elvis. Well, but let me take a quick look at Bitcoin. Well, Bitcoin definitely took a huge hit, right? I thought it did. Um, this past weekend, right? Yeah, it was down to like 49. It was down to 47,000, 48,000, and now it's back at 54. So that's pretty insane. How I know I saw it yesterday, it was still down. So it's definitely had a nice pull up since then. Hopefully, some of you guys that were bullish on Bitcoin bought a nice portion there. So now let's take a look at Teladoc for Elvis. So let me open up Simply Wall Street. Stock basics for Tesla. I am gonna do an episode on them as well today. Stock basics during the earnings, but we can take a quick look at prior earnings and recent news for both Teladoc and Tesla. So first, let me just take a quick look at T-Doc. Let me just get all my stuff open. So Teladoc. Let me open up Lazy FA. T-Doc. And let me open up some charts, right? So trading view. So let's take a look at Teladoc real quick. Oh man, I'm not signed in. That's lame. I think that should be it. Why am freaking nonsense? Let me go to charts, normal. There we go. All right, that looks a lot better. All right, so let's take a look at T-Doc for you guys. Thoughts about Netflix, Anson? Netflix, I mean, definitely a crazy pullback we saw on Netflix, right, Anson? With the overall, they did worse than expected on subscriber counts this quarter, and next quarter they expect very low growth. But this is something they've been doing they've been talking about, right, since the overall COVID situation. They mentioned that during COVID they were pulling a lot of subscribers, and after the situation was going to happen, their growth was going to be less than expected. That's what we saw this quarter, and they expect the same for next quarter. I just didn't think people thought it was going to be that bad. So right now with Netflix, I personally don't have a position, but right now would be a time where I wouldn't mind opening either a small position if I wanted to get exposure. Corsair, Alim. I haven't really taken a look at any news on Corsair. We can take a look at that one in a bit. But first, let's take a look at T-Doc. So T-Doc, first thing I'm seeing, right, it's even though the stock has been all over the place, right, it definitely doesn't seem to be overextended and sitting at these prices where it's been at since June 2020. So like I said, it's been very volatile, but the stock has pretty much not moved for the past, now has been like what, 10 months or so. If we take a look at in the past year, the stock is down about 38% from all-time highs. I do think a good portion, right? They did mention Amazon came out again and kind of re-announced similar markets. Is that what's happening with Teladoc? No, that was for GoodRx. My bad. Completely different company. But let's take a look at future growth for Teladoc. So Teladoc right now is expected to grow 25.5% on average for the next 3 to 5 years. So this is a crazy growth stock. They are profitable in earning. They're not positive in earnings, but they are kind of achieving profitability in cash flow from operations. So that's great. If we take a look at their balance sheet, they have about $708 million, about $800 million in cash, and about $1.4 billion in debt. But a good reason for that is because they recently acquired that other company, Livongo, and that helped them build about a good portion of long-term assets. So regardless, I do think their balance sheet is okay. Let's take a look at Teladoc stock investors relations. And I also want to take a look at the red flags analysis stick. Also want to ask for your my Aline, my top three stocks. I have four top stocks. That's Sorens, C Limited, Nvidia, and Sorens, Nvidia, C Limited. Man, what am I forgetting? C, Sorens, Nvidia. Yo, I'm forgetting one more. Can someone remind me what's my fourth stock? Nvidia, Sorens, C Limited. Man, and it's super important one. Sheesh. Unity. There we go. Unity is my fourth one. So those are my top four stocks, Alim. So Teladoc, right? I want to see how they have been growing their revenue historically. So in 2020, they grew their revenue yeah, Kevin, Unity, thank you. They're growing their revenue 97%. In 2019, Teladoc grew 32%, and in 2018, they grew their revenue 79%. So historically, this has been a strong revenue growth. If we take a look in the past quarters, right? In the most recent quarter, they grew their revenue 144% compared to the same time last year. In the previous quarter before that was 109. We can see, right, 2020 was a great year for Unity. Now, if we take a look at their gross margins, unfortunately, their gross margins are still pretty much at the same levels at 64%. So gross margins for Teladoc are still pretty impressive. Their profit margins took a hit. I'm guessing this profit margins was because of a one-time expense during their overall acquisition cost, and that's what drove this profit, because these are GAAP profit margins. But we can see Teladoc was uptrending on their profit margins, and they're probably expected to be profitable somewhere within the next 2 to 3 years. Another thing I wanted to take a look at was their cash flow from operations. So taking a look at their cash flow statement for Unity, Sorens, CRNZ. And now I just want to take a look at cash flow from operations. Trailing 12 months cash flow from operations for Teladoc have been improving over the past few quarters. Again, I do think this most recent quarter was due to the overall acquisition cost, so they must have had a bit of a hit there. But we can see they are profitable in operating cash flow, and their margins are improving. So Teladoc, I mean, overall, the company looks pretty strong fundamentally, right? Obviously, with earnings can be all over the place. Sometimes they could even do great earnings, but analysts might still not like it, and the stock might pull down. But overall, fundamentally, they are in a great place, and I'm happy that before they're doing their earnings, they are down a nice amount, so it kind of eliminates that risk for Teladoc. So hopefully that helps out a bit, Elvis. And let's see. Did they have any recent news on their investors news? Let's see. They announced a new CIO. Their quarters. There hasn't really been any new news from Teladoc from their investors relations website. All right, so now someone wants to take a look at Tesla. Let's take a look at Tesla. And Elvis, I hope that helped out a bit. So if we take a look at Tesla, let's just do Tesla stock. Right, this is traded under the NASDAQ as ticker TSLA. I'm pretty sure everyone here knows that. From the past year, the stock is down about 17.4% from its all-time highs. It currently has a market cap of $700 billion. So first, let's start off with future growth. Let's take a look at what Tesla is expected to see. So future growth, right? Tesla is expected to grow 24.4% on average for the next 3 to 5 years. So Tesla is a crazy hyper growth stock. Next, hey man, how's it going? When exactly times are earnings? For which one? Nem, are you talking for Teladoc or for Tesla? I know I don't know the exact time for Tesla is tomorrow after hours. I'm pretty sure it's going to be somewhere between 4:30 Eastern time is when they're going to give the press release, the quick press release. But the actual presentation, I think, might be later on in time. Maybe when we take a look for Tesla on earnings, them. So we'll take a look at that in a bit. So let's see where were we in Tesla. So Tesla, strong future growth. They are profitable. They are positive in cash flow from operations. So fundamentally, Tesla looks pretty strong. Then if we take a look at their health, right, their bounce in the future. Um, and hopefully, yeah, I don't know. It looked like I went down for a second. Did my stream slow down for a bit? Did it lag out for you guys there? Or it's quite laggy. All right, let me try to let me see if I can help that out. Maybe if I close this. Did it get better, Anson? I think maybe I don't need this open and this one. No, it's me. I saw that it was laggy for me. It says connection now should be better. Yes, better. Okay. Yeah, it's so weird. Stock tweets for I don't know whoever designed stock tweets, but on every computer that I get on for stock tweets, that one website pulls so much insane power from it. So should be good now. All right. So Tesla, right? Tesla fundamentally looks pretty strong. Now let's take a look at historical growth, right? I also like to take a look at historical growth for companies. Let's look Tesla. So first with Tesla, I want to take a look at that operating cash flow margins. And I mean, it's crazy the improvement since 2017, right? In 2017, they were barely making money in cash flow from operations. Now we're taking a look at 2020. Their margins are as high as 18.8%. You can see as their revenue is increasing, their cash flow from operation is also increasing. Next, I just want to take a quick look at their income statement. And right, historically, let's see. 2020, 2020, they grew their revenue 28%. In 2019, 14%. In 2018, 82%. So historically, it's also been a strong revenue grower. And if we take a look at trailing 12 months for margins, their gross margins are improving a bit and their profit margins are also improving. So again, Tesla fundamentally looks good. Just because a company looks good doesn't mean it's not going to be volatile, right? I do think Tesla is going to be very volatile for the next few quarters. But let's take a look at their investors relations. So right now they are press release. They already gave us their press release. Let's see if they have an actual time here. Menu. They haven't given us a time. Earnings date April 26th. Oh, here we go. So their earnings date will be April 26th, and the webcast will be at 5:30 p.m. Eastern Time or 2:30 p.m. Pacific Time. So a bit late, right? On time. And here you'll be able to watch it here on their website. So then this is their actual time on earnings. All right, so Tesla definitely looks pretty strong. So is this still lagging, David Becker, or is it better? And also, while you guys have a chance, make sure to hit the thumbs up. It helps so much with the YouTube algorithm. So we don't need Teladoc anymore. So any other stocks you guys want to take a look at for their upcoming earnings? I mean, we saw Tesla did give us some press release already that they saw huge growth. Their first quarter, they produced over 180,000 vehicles and they delivered 185. And that's a huge growth compared to same time last year, right? Let's take right, so this was quarter one, and let's just take a look at quarter one of last year. So quarter one of last year, they produced 102,000 vehicles. This year, they produced 180,000. Last year, they delivered about 88,000. This year, they're delivering about 100,000 more. So you can see the overall increasement. A huge reason is because now they have that new plant in China, right? And they're seeing strong Model Y reception in China, and are quickly progressing to full production capacity there. So one thing I do want to take a look at this earnings is how their margins are improving right now. Now I feel like they have a nice amount of portion of cars outside of the U.S. So I want to see how that margins is really into different companies, into the different countries, right? David Becker, that one's crazy. Berkshire, Anson. Did they do earnings already, Anson? I mean, so it's weird with Berkshire, right? Berkshire, they since they are a holdings company, it's pretty much just how their holdings are doing. But now I do want to take a look at waste management. Let's look at waste management real quick for David. C Gray, agree. I'm looking forward to those two. In all honesty, I don't mean this in any bad way. I hope Pinterest, even though it's definitely pulled back a lot, I hope that even though their earnings might come out good, what's going on, Fat Meadow? I hope even though their earnings do come out good, I wouldn't mind them seeing a price decrease to make it even more attractive. I do think Pinterest looks attractive right now. I want them even more attractive though. So waste management, right? New York Stock Exchange ticker WM. One thing about waste management is they do have a dividend yield, something I normally don't see in most of my stocks. It's been up tracking, right? Mr. Bear. Oh, what's going on, Mr. Bear? Oh man, Fat Metal. Tomorrow, I might not get any sleep. I might just do videos nonstop, Fat Metal. Anson, Spotify, and Wix. We can take a look at them as well. So, Anson, uh, I'm looking for a dip on ADP once they report earnings. Good long term hold. I feel like I want to, even though most of my stocks are growth stocks, I do have some value stocks. I might do a few videos on some strong dividend growth plays. I don't know if some of you guys might be interested in some of them. I kind of was researching a bit over the weekend. I don't know if I might purchase, but I just want to increase my knowledge in some of those stocks in that market, where they're paying a good dividend, but they're still expecting to see some great growth. Regardless, let's keep looking at waste management. All right, so Waste Management Inc., New York Stock Exchange, WM, market cap of $57 billion. Let's take a look at how the company. I don't expect much growth from it since they do pay a dividend. So 6.2% growth, right? So this is a company that's not a high grower. It's one that's already been profitable for many years. They're already positive in cash flow from operations. So a 6.2% annual growth rate is not that bad. Right, it's what you would expect, somewhere in the high single digit values. If we take a look at their financial health, they have their financial health right now. They have very low cash and short term investments, right? You can see they're very, very high leverage. They have high debt compared to cash. If this was one of my growth stocks, this is something I wouldn't like. But because it is already a developed company with profitable earnings, with positive cash flow from operations, I do believe it's okay for them to be leveraged like that. Let's take a look at historical growth for this company. So WM, right? And let's take a look at revenue growth in the past 3 years. Um, So they actually saw a revenue decrease last in 2020, but in 2019 they grew 3%. In 2018 they grew 3% as well. In 2017 they grew about 6%. So we can see this is something that I personally wouldn't find attractive, but hopefully their margins are improving. Let's take a look at trailing 12 months margins, and this is between the year span. Their profit margins have been kind of flat at about 10, and their gross margins flat about 38. So we can see the company isn't really moving in one direction. Not something I'm too excited about. This is more of just like a quiet stock, probably to collect some form of earnings over dividends over time. Then let's take a look at their operating cash flow margins. One good thing though I am seeing, right, is their operating cash flow margins have been increasing. Damn thingy. Have been increasing since like 2017, even though it's seen a bit pullback this year. Overall margins in operating cash flow margins have been pretty strong. That is crazy, right, Fat Metal? But it's crazy that they saw that revenue decrease, but they didn't see much effect on their margins and their operating cash flow margins. So their margins haven't really been affected too much based on that revenue decrease, and they're still expected to see some form of revenue jump in the next few quarters, right? Now, hold on, let me sign in. I don't think let me get on TD Ameritrade real quick. I just want to see price targets for this company. Give me 1 second, guys. Waste management. I don't think. I'm sorry, guys. Analyst reports. So right now, this is waste management, right? I think it is. Yeah, waste management. So waste management right now, they have five buys, they have 5 holds, 0 sells, 10 analysts. Right now, the average price is $134. So this is a stock that analysts don't believe will move at all in the next year or so. So it doesn't seem analysts are that bullish in the company. Man, you guys should have told me. I didn't know I wasn't showing screen. Man, you guys missed so much information. um so right now, tomorrow is gonna be really hot earnings. So let's see. What else do you guys want to take a look at? I'm looking for a dip on ADP. Off topic, no earnings. Any thoughts on Coinbase? Um David, I mean, sometimes you guys gotta remind me. I was the amount of information. Oh man, it's cool. Recycling revenue. Interesting that waste management had revenue decrease in 2020. I have another recycling company, Umicore, and the recycling part of the business did really great. I would say up about 50% on current prices on Stitch Fix, but down about 16% from all-time highs. Sell for a more profitable stocks or hold till if when Stitch Fix reaches previous highs. So Jibiki, that's a pretty. You're currently up about 50% on the stock, right? But the stock is down 60% from all-time highs. I don't know. I think that's something you have to decide, Japiki, right? Maybe like one thing I like to do the most is think which scenario would I hate the most? Would I hate the, let's say right now I have Stitch Fix. I like to think if the stock price drops, am I gonna regret not selling? If the stock price goes up, am I gonna regret selling? So see which position you regret the most, and that kind of gives you a hindsight of what you are emotionally prepared for. Another thing you can do is just sell a small position, book some gains, and use those small gains to purchase outside. So there's plenty of things. I think it's more of an emotional thing. What do you prefer? How convicted are you in the stock? If you're not that interested in the stock anymore and you see some better place out there, then that might be the better move for you. But I think every investor has different emotional value on their portfolio. Also different convictions. For me, for example, Stitch Fix is not a company I have. So if I had a big winner, I personally, since I don't have high conviction in it, I would sell I would sell some position to kind of go out there. All right, guys. So what's another stock you guys want to take a look at, right? So these are earnings this week. I'm pretty sure you guys missed this picture. If you guys want to take a look at any individual stock, I don't know if Anson, do you want to take a look at Spotify and Wix? But Jabiki, yeah, I think that's the best way to ever look at a situation. Like, think about it. If the stock price drops down, what am I going to regret doing? If the stock price goes up, what am I going to regret doing? And whichever situation, like, make a quick pros and cons list, see where your emotions lies, and that can help you make a better decision. MGM goes on Wednesday. Oh yes, they do. That one will be pretty interesting in that market for sure. If we're looking at value stocks today, Adobe Laboratories is an instrument investment. Incredible business. Is that the audio one? All right, so Adobe Laboratories. So Adobe Laboratories, yes, this is the overall audio. So let's, now that I have my screen showing, let's probably see how things were done. So historically, let's see, the stock has been up a nice amount. It pays a strong dividend yield, not a strong, it pays a dividend yield of about 8.8%, and it has a market cap of about $10 billion. We can see right in the past year, it has continued to go up. I'm guessing as more people are purchasing audio products as they're from home. I don't know. Let's take a look at historical growth, right? So Adobe. So Adobe Laboratories, future growth. This company is expected to grow 5.5% on average for the next 3 to 5 years. So it's not a crazy growth stock. They have been profitable for a long time. And that's true. Most of their earnings are from licenses with high gross margins. So we'll definitely see that. They have positive cash flow from operations. So fundamentally, they are at a good place. So seeing them with a 5.5% revenue growth is not the worst thing, right? Because they are already a kind of a stable company. If we take a look at their financial health, this is something I really like. Look at them. They have no debt to their name and they have strong cash and short-term investments. So they are super strong balance sheet and they are super strong fundamentally as well. Now let's take a look. Hopefully this is a US company that I can look at them here. So I want to take a look at two things. Income statement, how they have been doing in the past. So first, let's take a look at the revenue growth. So unfortunately, right, revenue growth for Adobe, they might be switching out markets, right? They might kind of be moving more into like a subscription-based services. But for 2020, the revenue did decline about 6.4%. But 2019 was a strong year. They had about 17.7. So you can see historically, right, they are all over in form of revenue growth. Let me take a look at quarterly revenue growth. So obviously, right, quarter four is probably a big revenue time for them. They're big. That's where they probably make most of their revenue when everybody's buying stuff for during the holidays. A lot of their customers are probably like phone companies, and that's when they probably see huge transaction moves. So Adobe yeah, that's a good, right. They have suffered a bit from cinemas right now. I'm pretty sure that's why they're seeing strong revenue decline in previous quarters. So this is one that has definitely been affected by COVID. But regardless, right? Regardless, they have seen a form of uptrend in their stock, right? So that's different. Even though they've kind of taken a hit in revenues, they have been. If we take a look at trailing 12 months, they have seen an improvement of gross margins, right? Even with COVID, their gross margins, profit margins are improving. They have 25.2% profit margins. This is pretty strong for a company. Let me zoom in for you guys. Maybe you guys can see better. And their gross margins, like you mentioned on Fat Metal, they are pretty high. Gross margins are 88.5% for this company. Next, I just want to take a look at cash flow from operations. Yeah, those gross margins, 88, insane. Gross margins, right? As the revenues are increasing, their cash flow from operation is also improving. Operating cash flow margins are 30%. So this is one thing though, they have been decreasing a bit over time, even though their revenues haven't. So their margins, operating cash flow margins have been decreasing a bit, but they still have high free cash flow margins as well. So fundamentally, definitely pretty good. The only thing that really worries me, Fat Metal, is the stock has continued to see a heavy uptick in stock price, right? Oops. Adobe stock. And now let me see if I can look at price targets for this company. Let's see. This is what was this? DLB? Let's take a look at some analysts. So right now, there are not many following this company, actually. This is a very quiet one, it seems. Fat Metal, right? There's only about 3 analysts looking at this company. 2 give it a buy, 1 give it a hold. And right now, the average price is $110, which is a 10% increase. But with so little analysts following it's kind of, they might just be skewed to it. It's completely underlooked, right? And the stock market is open. How are we doing? So yeah, man, you guys missed this whole thing when I was talking about Tesla, right? The overall production numbers. So is there any other stock you guys want to take a look at? I'm actually pretty um interesting to see what you guys want to look at. Um yeah. I do wish Fat Metal, right? They have a strong cash flow from operations, but maybe just because the stock has been moving high, I would have expected them to have a higher dividend yield. Man, I can't believe SPY is already at like 417. All right, David Becker, you want to take a look at MGM? All right, so let's take a look at MGM. So MGM, this is MGM Resorts. They deal with a lot of casinos, right? Let's take a look. Right now, the stock is sitting at $41.94. In the past year, the stock has pulled up a nice amount. Now, with things reopening, people are super, super excited about them. Market cap of 20.7 billion. Let's start off with a quick look at future stuff for MGM. So Becker, right? MGM, future growth. This company is expected to grow its revenues 22.2% on average for the next 3 to 5 years. Main reason for that revenue growth is, right, this past year was a huge impact for this company. So obviously when you kind of get skewed like that, it's going to show your revenues growth can be a lot stronger than expected. But from 2019, they're still seeing some form of small growth. They did take a big impact with COVID, right? They are not profitable and they're not expected to reach profitability again to like maybe end of 2022. Not sure how true that would be. And again, cash flow from operations. It's kind of taking a short term hit, it seems. But after that, and they are all getting into the online gaming. So that's another reason that they probably could be using a lot of money at the moment. What's going on, Fizz? Good morning. But we can see short term, they have taken a big hit, David Becker. But it seems like analysts believe it's only going to be a short term thing. Now, if we take a look at their financial health, right? Their financial health seems to be, first I want to see if they took a huge growth during COVID. It doesn't seem like they have, right? They did see increase in debt, but it doesn't seem to be that much. Obviously, this company has, it used to be really strong in fundamentals, so they were leveraged. They have about $5.1 billion in cash and about $12.5 billion in debt. I wouldn't be surprised if this year or recently they might have done some form of second offering for the, or senior notes on it to just build up the cash position. But overall, they are leveraged, not too bad, just because of the way the things moved for them historically. Now let's take a look how they were previously moving. So first, let's take a look at cash flow from operations. Let's take a look at trailing 12 months. So we can see COVID situation was really, really bad for them, David. Operating cash flow margins were weak. They were probably making, it's because of that revenue, right? Their revenue declined so much. So it's gonna take a year or so for them to kind of probably begin back to normal operations. And one thing that is kind of freaking me out, right? It's how is it compared to, it's higher than pre-COVID levels. So this is something that's a bit scary in my opinion, right? So the company fundamentally is at a whole different place that it was before COVID situation. And after COVID situations, we've seen a huge impact to their fundamentals, but somehow the stock is higher than it was. Obviously, like you mentioned, David, they've entered new markets, right? You're mentioning they're entering like the live sports business, the live betting. They're entering the iGamification of online gaming as well. So that could be a good reason for the pull up. But at the same time, are they expecting too much from MGM? So with this earnings, I do believe it will be very, very volatile. It can go any direction, right? But to me, just based on that fundamentals right now, it's not something I personally would enjoy. Let's take a quick look at historical growth as well. Um, let's see, income statement. So we know this year was bad for them. So let's not take a look at them for this year. How were they doing before COVID situation? So before COVID situation, they were growing at close to double digits, right? In 2019, they grew about 10%. In 2018, they agree about 9%. And in 2017, they grew about 13%. So now the final thing I want to take a look is just some recent news, investors relations. So MGM. Oh man, AMD, Shopify, those, yeah, Google too. There's so many, right, Fizz? Right, we have AMD, we have Microsoft. You not excited about Microsoft? Fizz. I thought I knew you. Alphabet, right? We have Tesla, Shopify, Facebook, Apple. It's insane what we have. Amazon. Most of these I don't own, but still good. So let's see. MGM, recent news, latest news. Let's see. View all. Anything crazy? MGM rolls out. Nope. Nothing crazy. I actually hate their font that they use on their website. It makes it kind of hard to read. Buffalo Wild Wings and BetMGM launch exclusive sports betting experience. Pretty interesting. Weird. Now I want Buffalo Wild Wings, even though it's breakfast time. But every time I stream, I get so hungry. All right, so that was a quick look at MGM. Yeah, Fizz, it's crazy, right, man? They should work on companies should really work on their website. There should be a website rating when looking at companies. All right, so and also, guys, while you're at it, make sure to hit that thumbs up, right? It helps so much. So Jibiki, you want to take a look at Upstart? I keep hearing about this one. I don't know what they do. They are a leading artificial AI lending platform. This is a brand new Upstart. All right. So they're in the fintech. Upstart stock. Stock is up. How are stocks up right? Are my stocks up right now? Let's see. Overall pretty green, it seems. Nothing crazy big for me. Ed, you like Upstart? All right, so if Ed likes it, we're really gonna take a look at it. So market cap is $8.2 billion right now. Is this a recent SPAC or a recent IPO? It seems like a recent IPO. What's going on, Michael? Pilot Poncho. Yeah, I saw. Appreciate the support, man. Appreciate it 100%. Okay. I'm pretty sure you also have that same name on our Discord channel, right, Poncho? RiskViz, AI lending, sort of like Lemonade, but for lending instead of insurance. So how are you guys feeling about Lemonade kind of entering that car insurance, right? That was a pretty crazy move. I wonder, are they hitting only certain states with the car insurance right now? I might have to look into them for sure. I know my brother's soon starting to look for new car insurance. I might tell him to see how that one acts. All right, but Upstart, we can see straight under the Nasdaq as ticker UPST is currently sitting at $111. It is up a nice amount from when it first started. That's insane, 273%. So it's definitely seen a crazy uptrend. But from its all-time highs, the stock is down 33%. At the same time, it's seen a pullback. It depends, right? It's crazy how a stock can differ from when you bought it. If you bought it here, you're like, I hate it. If you bought it here, you're like, I love it. If you bought it here, you're like, okay. Yeah, I gotta check it out too, Ed. I want to see what kind of savings if I could get, and I might try them out for other insurances as well. So investors relations. Let's see. I mean, I know this is a brand new company, so I don't know how much information we might have for Upstart. So Upstart right now, future growth, right? Analysts expect this to be a huge grower, 36.6% on average for the next 3 to 5 years. They are profitable. They are positive in cash flow from operations. So fundamentally, looking pretty straightforward, pretty good. If we take a look at their balance sheet, they have about $250 million in cash and $62 million in debt. So they have plenty of cash compared to debt. Great thing. They are profitable. They are positive in cash flow from operations. I know they are new, so I don't know if we can find information here on Lazy FA for them. But first, revenue growth, right? In 2020, they grew their revenue 42%. In 2019, they grew 65%. In 2018, they grew 73%. So historically, they've been a strong growth. If we take a look at revenues, right? I can't really take much look at trailing 12 months, but gross margins, this can't be real. Their gross margins are at 100%. How are gross margins? I mean, is it because they're all digital platform? Don't they have to pay for something? But they show gross margins on, so there could be an error there. But we can see profitability or profit margins have been improving over time. Profit margins of 2.6%. Yeah, it has to be a mistake, right? Fat Metal, they probably put some random number. The only thing is they pull these from, well, let's see. We can actually go to their 10K report. Let's look at gross profits. Wait, what am I? Did I look at? I said put 10K report, right? So 10K report. Yeah, this should be 10K. So let's look here. Let's look at for revenue. I just want to see a damn sheet, yo. So they have total revenue. It seems when they do, okay, so I can see what happens here, Fat Metal. What they ended up doing, because this website just pulls from their 10K report, so they don't put like a gross expenses. Right, their overall they just go from gross expenses to operating expenses. So that's their total operating expenses. But they don't show any cost of revenue. Fat Metal. That to me is pretty weird, right? You normally hear after revenue, you would see cost of revenue, and after cost of revenue, you will see operating expenses, and that'll be your operating margins. But they're saying they have no gross cost for their revenue. Which is weird. I mean, right? Because right, there's gross margins, there's profit margins, and in between gross margins and profit margins, they have the operating margins. But yeah, it was pretty weird. So let's see. Now and let me take a look at their cash flow from operations. Operating cash flow margins, they are positive, but they are decreasing over year. I guess that's to be expected as they are improving. Finally, let's see if we can see any form of price targets for the company, and then maybe I can take a quick look at their presentation. Upstart. Damn it, I was timed out. Give me 1 second, guys. And Pancho, yeah, man. My wife just had her friends over, and that's all they drank. That's all they had. It's insane. how that market is growing like crazy. I don't know if I can show alcohol during these streams, so I don't want to do it. I think it's only if it was 18 and over, but I don't think it's 18 and over. What company am I looking at? Upstart. Sorry. So Upstart analyst reports. Right. So Upstart, let's see. Open an image editor. So Upstart right now, there are 5 analysts looking at this company. 3 give it a buy, 2 give it a hold. The average price is $106. So analysts, I mean, at the same time, I don't follow any of these analysts. It's similar to how I don't follow like ARK or any other big ones. But I do think it's good for people to see what some of the other players are saying. So right now, they're predicting a pretty much a flat line from current prices right now. I mean, the stock has definitely pulled up a nice amount. Hey, hold on. Let me take a quick look at Upstart's presentation. Let's see. Upstart. Let's see. Events and presentations. Fourth quarter presentation. So Upstart. Let's see. Revenue. I mean, you can see that revenue growth year to year. Revenue up. Income from operations is profitable still. Net income is profitable. Adjusted EBITDA are 18% of their total revenue. So adjusted EBITDA margins are pretty high. For the full year, the revenue was up 42%. Their net income, their adjusted EBITDA was also pretty high. What else do they have to talk about? Loans transact, so more people are using them, right? That's pretty cool. You can see that overall growth, 62% compounded annual growth rate on loans. Fully automated loans, 71% of Upstart loans were fully automated and instantly approved. That is pretty crazy. And now I just want to take a look. Revenue for Outlook, they expect about $500 million in revenue. What did they collect this year again? 233 this year. So they're expecting about 100% growth? No way. For next year. Yeah, for 2020, they did 233 million. For the full year of 2021, they expect approximately 500 million. For the next year, they're expecting 100% revenue growth. That is insane. That is pretty crazy. I can see why the stock has gone up insane. That's pretty insane. Yeah. Overall, company has definitely pulled up a nice amount. It's probably going to be very volatile. At the same time, it's definitely seen a nice pullback as well. So a lot of that risk can kind of have been eliminated. David Becker, punch, a low calorie and easy to drink. I'm 51, so I feel like it is what SEMA used to be. I mean, super popular, right? Here. That's so every time we have barbecue, well, we had barbecues last year. That's like what everybody would bring and stuff like that. So is anybody interested in Tesla earnings today? Are you guys going to be watching the earnings report? Do you guys want a Tesla video? What's going on, Ben? Happy Monday. Hope everybody has a good day today, too. I mean, market seems to be green. I hope it doesn't change. So yeah, Tesla, fat metal, not a car guy personally. In form of earnings wise, Tesla, I feel like it's always super interesting. I used to cover, I just recently became a shareholder of Tesla, but even before I wasn't a shareholder, I wouldn't mind listening to them. Grab, that's all you've done this week? Did you end up purchasing? Ford is also on Wednesday. I feel like people are going to be interested. I think this is going to be the first quarter that their Mac E that their Mustang Mach-E is gonna be shown there. So I think that's why people are pretty interested about Ford Motor for this Wednesday. Ben, yeah, that's true, right? I mean, earnings. Some companies I only follow earnings every other earnings, right? Oh, Rufus, is that one you're gonna start building over time? Yeah, Pancho. I feel like both. It's definitely a both drink for both men and women. Ugh. Western Digital is also one that might seem pretty interesting for what's the best companies to get exposure for sales or best brands. Um, that I'm not sure. Maybe some people here might know. Pancho. Uh, maybe someone here can share. I don't know if Boston Beer has any. Uh, all right, guys. Let's see. I just want. I don't think I'm gonna take a look at any other stocks. I'm pretty much just gonna. If anybody has questions or just wants to chat, feel free. Um, Ben. Oh man, Ben, are you not? Are you not in U.S. Ben? I mean, freaking fractional shares is the most important thing. I feel skills and there edit STC and damn. Let's just. I just want to take a look at the stocks and Sam. So this is an American producer marketer of beer, wine, and spirits. Let's see. I just want to take a quick look at just their future growth. So this one is STC future growth. This all right. It's pretty much a developed company, right? They're already developed market, but they've been right super profitable. They're expecting 4.4%, not crazy. Um, and then you have Sam. Sam is a high grower, right? Yeah, Sam has been Sam future growth is expected to be 17.4%. They are profitable. They are positive in cash flow from operations. Yeah, that's for the hard seltzer. Yeah. Um, I figured Ed. Poncho was asking for them. So I mean Boston seems just insane, right? Strong future growth. They are profitable. They are positive in cash flow from operations. They have no debt to their name. They have a positive cash. They have strong cash and short-term investments. I feel this one has seen a strong pull up, right, in stock price. This is Sam. Yeah, it's been insane how this one has done. It's just been going and going and going and going and going. But regardless, with that type of growth, their PE ratio is 64.63, and they're still expected to continue to go at crazy levels. So Sam seems pretty interesting with the crazy pull up. If I was to ever open in Sam, it will probably be like small exposure and adding on over time. It's not one where I would open with a big position at once. But Boston does seem pretty cool. All right, guys. So that's it for me for this morning. I hope you guys enjoyed the stream. Next time, remind me to share screen because I know for the first 30 minutes, we looked at a few stocks and I wasn't showing the information. So I never go secretive. If you guys ever feel free, just remind me to ask. Take care. I will be on tomorrow. So every day I do Monday mornings, unless like this Friday I had to go get a haircut. Um, so I couldn't make it. It kind of there was a lot of traffic to make it to my barber. But every day, in the morning at least, I will be live streaming for at least an hour. So if you guys have questions, if you guys want to take a look at stocks, I enjoy them. But remember, right? These are just all my opinions, and I hope again everybody has a great day today. If anybody's going to work, enjoy work, and I'll see you guys with a few videos. I have a video coming out right now, probably at 12 o'clock Eastern time. It's gonna be Redfin, Zillow, and Matterport. I already recorded. I just gotta edit it. I really enjoyed the video. And then later tonight, I might do Tesla. And then tomorrow we have some big earnings. So those are gonna be the videos I'm most likely gonna be pumping out tomorrow. So again, guys, thank you for passing by. Take care and see you.